don't have too much going on. So once in a few months, I thought I would do like an impromptu Q&A, both on investing as well as trading and in the current regime and all that. So we'll take speakers one by one, and it's just like whatever people have in mind, what they're currently doing, what's working for them, what's not working for them, things of that nature, and any kind of questions that they may have, we'll go over that. So Stita and Yusi can take speakers, and as they're done, we can just swap them out. Am I audible? No one else has spoken so far.
Yes, sir. It's audible.
Okay, perfect. Thanks.
Himesh bhai, you can go ahead.
Shreyas, bro, morning. What's up? Thanks for doing this. Pleasant surprise always hearing from you. You see, thanks, man. Had a very tough month. I DM'd you. You probably know. September was the worst. October was going amazing, but then again a stunt or two happened, and then I think gave about 80-85% profits just on one day. Now I'm sure November and December is gonna be the same. Uh, I think I'll take a break listening to you and Praful. I thought I'll cut down the position size, and which I did. And I'm not doing, active trading now. But yeah, I mean that's the thing. What do you recommend for the last 2 months? Although I know, Bandi, you've told bro that just take a break and don't even. And I keep going back to your old post where you were taking breaks. So how does that work, and how do I stop myself from like over trading now, especially for the last 2 months, where I still want to am struggling to be in profit. I mean, although I am, as you know, but I'm just trying to ensure that there's no mistake that I do going forward, going forward. So any advice on that, bro?
Not much, man. Like you already know what you have to do, as you've said. Look, basically, what has happened with the whole new expiry regime is that a lot of previously high expectancy systems have started to show a lot of cracks. There's a lot of new market behavior. We're seeing like big IV explosions on expiry on 0 DTA. IV explosions didn't used to be much, so it was primarily dealing with gamma. But lately, we're seeing that towards in the last 1.5 hours, sometimes the straddle ATM straddle value is doubling, right? So stuff like that is not something that people have generally been accounting for, and it's also showing. See, previously when there were like fewer expiries and expiries were spread out, there wasn't so much concentration on each individual expiry. So this is the progression of congestion that's taking place. It's like everybody's trading one instrument one day and everybody's switching to the next instrument, and given the nature of that supply as well, due to systems that were working, you're seeing that it's leading to these highly operationally problematic situation. So if for whatever, I mean, there's no rocket science here. If you're having a tough time, it doesn't have to be that you're losing money, right? Like if you're stressed, you have to take a break. You can't beat a dead horse. I've spoken to a lot of people, and I can say that everyone's been having not the best time. Even if they're making money, people are feeling both the exhaustion, because previously it'd be like, okay, Tuesdays and Thursdays is like high intensity and everything else is chill. But now it's like every day is high intensity. So in a way, we are not also able to recognize the impact that's having on us in terms of our mentality, and stress bottles up, right? So you have to force breaks, and cutting size is the best. Like whenever you feel stressed, you have to cut size. Also, like in this regime, I'm finding a couple of things that are working for me. So I'll just like what I do is, if I find things attractive, I'm trading like at the money, but with smaller size. So that gives me a better risk to reward when, let's say, the premiums are attractive, rather than selling OTM and sitting where you won't realize anything till the end of the day, and suddenly one spike it'll take you out and then you don't have compensation. I'm preferring having smaller size, trading at the money, and whenever I feel like the opportunity, the attractive premium has come down, I then swap it out. That could either be into ratios, And to be very frank, if that works out, towards the end, I'm only trading long gamma. My idea is very simple. What's happening is, due to congestion, by the end of the expiry, everyone's sitting only on like 2-3 strikes max, right? Like everyone's sitting on 2-3 strikes, and any panic, like we saw this twice with Fin Nifty, is leading to complete butchery of those people. So there I am actually buying, I'm straight up like buying options whenever there is a possibility. But when I say I'm buying options, people have to understand I don't risk my capital in buying options. Whatever I've made in that day, maybe a part of that I will put into it. But my, see dude, it's less about, oh, what can I do to maximize profit, and more about, am I doing good trading or not. Yesterday, when synthetic future is trading at 15 rupees premium to the spot with like half an hour to go for averaging, spot is at 19 now what was that, 19752 or something, and the put option is trading at 3 rupees. It doesn't make any sense. So those kind of opportunities, I'm towards the end, I'm just quitting. I don't want that last 1 hour of decay or whatever. So I'm switching to long. So everyone has to figure out what's working for them. If you're feeling stressed, just take a break. And it's not rocket science. If you're like, what do I do to stop myself from overtrading? Let's be very clear. The competition pool has gone up. So once again, the same law of the market, that people who are disciplined will make money, and people who are not disciplined will lose money. So like, you have to kind of force yourself to behave appropriately. So um, yeah, thanks, bro. But like, everyone's going through a similar thing, so nobody is isolated. That the systems that they had previously, be it non-directional, directional, whatever, short wall systems or long wall systems for that matter, because even long wall systems, you might not get a move for the entire day, and suddenly you see that options have gone 10x. People think, oh, option buyers must be making great money. No, man, it doesn't work that way. When the rate of a move is so fast that like in a second it's like gone up 10x and come back down 10x, nobody can really take advantage of it. So that's the thing.
Bro, I was just thinking that, like, probably with this thing, there is a buying setup that can be created. And honestly, I tried that last month only on one day, which is 25th October. And it was a crazy day. Firstly, I wasn't able to execute, the sell. I mean, I was buying at an 1800, 1800, 1800. By the time I saw that, the MTM went crazy. I mean, I get what you're saying. I mean, I'll try and stay disciplined. Probably you can take other questions, man. I mean, you have already repeated this so many times,
Sure,
but I
sure.
still come here to get a reconfirmation.
Thank you,
Thanks,
thank you.
bro.
So, so what do I mean by this, by the way? Just to give you an example, let's say you have sold a 10 rupees option and you have set a market order either through your algo or through the broker to exit, to take stop loss trigger at 20 and market order, right? In a spike, you'll see that, let's say the spike went till some 30-40, you might get your exit at 30-40 because sorry, I got a call. Am I audible?
Yeah, yeah.
Yeah, bro, go on.
Yeah. You'll be like, Arey boss, my market order executed at the peak. Same thing, let's say you're long 10 rupees option, and when it's spiking, you exit. And you'll see that your exit will be somewhere in the middle at 20. The reason for this is very simple. In those rapid moves that take place, given the infrastructure that we have, which is like, let's say you have an execution terminal that is connected to the broker through APIs, and then the broker is connected through the exchange. It's a very slow process. So we can never compete on a bid ask spread. It's like the slippage that we get, you can have positive slippage, you can have negative slippage. Like positive slippage, like it works in your favor, negative slippage works against you. But with our retail infrastructure, and everyone here is retail only, anyone who uses a broker is not a member of NSE with colocation, is retail only. We will never be able to compete on bid ask, so we'll always get negative slippage in such moves. You notice, if one guy has bought and one guy has sold, if the guy who is sold is trying to cover his position, he will get a higher price. And if some guy who's bought is trying to sell to book his profit, what is that noise? Yeah, it'll always work against you. So we can't compete. So one more thing that I'm trying to do is I'm trying to bring down the churn. Uh, there's some noise. Okay,
It's
so
Jesse, bro. Can you mute yourself, please? Thank you.
yeah. So that's also something to keep in mind. Look, one of the biggest issues that this regime is showing is the operational risks, right? So to reduce operational risks, something that I'm doing personally is pivoting from high churn into low churn, which is I don't want to constantly be making big changes on full margin. I would rather be using a smaller portion of the margin to trade higher premiums and try to approach it that way rather than trying to take large exposure on lower premium. So, yeah, perfect. I think we can go to the next question. Thank you, Himesh. And by the way, this doesn't have to be only trading related. This you can be investing related questions as well, and not like a purely trading Q&A. So that's the broad thing. I think we can have the next speaker. Jordan, you want to go?
Yeah, Panditji. So, yeah, one thing, I've been a follower of you from the last 3 years, and you're really helpful. And I just want to quickly ask one question, like, how much are you into selling currency options? I mean, having all these expiries each day, and having all the spikes and it hitting the stop losses. Uh, I mean, comparatively, USD INR is more or less will be in the same zone. I mean, it will be trading in the same boundary. So, what do you think? I mean, how much of your capital you can invest it into currency options and also sometimes into the commodities? I just wanted this question to answer.
Sure, Mr. Jordan. So, two things. Okay, so I haven't looked up currency options in the recent past, but previously when I was researching it, there are two key takeaways from currency options. One is that, like you said, it doesn't move much, but because it doesn't move much, the IVs are always priced on the lower side, and whenever currency moves, it moves by a huge amount. So it's always a all or nothing kind of trade. It's like, okay, if you make iron fly, you might get max profit or you might get max loss, right? So that is one thing. It's like very unpredictable in that behavior, that it's IVs are priced lower. And secondly, the liquidity is another issue in currency options, because when people want to exit, right? So as I said, when it moves by a lot or it doesn't move at all. So when people want to exit, the whole world wants to exit at once. You won't even find liquidity, is what was my feeling at that point of time, which is why I have stayed away from dabbling in currency options. And so I don't have too much to add there. Those are my two key things in currency option. That, see, even mid cap nifty, one of the main reasons I stay away from it is or at least take very little exposure in it, short wall, is it's a very difficult instrument to price walls. It'll either not move at all, it'll stay in 30-point range the entire day, or it'll move 200 points, right? So for me to have like a system for that, I would prefer trading such things long wall, not short wall. Because the potential, like we've seen how, I mean, we've seen mid cap like single digit options go to triple digits just in the past 2 months, at least 2-3 times, right? So that way, I haven't dabbled in it too much, but yeah, there are many people who take currency exposure, and I personally am not too big a fan, because for me the biggest thing I want in trading something is how scalable it is, and given the whole liquidity death scenario, I've not explored it too much. And I
Yeah.
don't trade commodities. Your second part about commodities, I don't trade commodities. I feel commodities, once again, is just a niche that I have not explored. Like, see, the thing is, everyone does their own thing, right? Like, and I have a niche, so I don't try to keep finding beyond that niche. I will try and experiment within my niche, but I don't try to go too much beyond that.
And just one more quick question. And what do you prefer? I mean, trading or investing? I mean, do you want to trade for like? Do you want to trade it for your income, or do you want to create a portfolio where down the line, 10 years or 15 years, you will have a good amount for the rest of your life? Right? What do you prefer actually?
Very simple. Trading is for cash flow, and investing is for wealth generation. So basically, the way I see it is, I trade to generate an alpha, which is like, I want, since first of all I'm able to get margin off of my investments, that whatever trading I do is to try and make a little bit more. And whatever cash I generate, it either goes invested into equities through ETFs primarily, or some amount of stocks, or it goes into bonds. So that way, investing is for building a mountain. Trading is just for generating a certain amount of cash flow on top. So it's not about which one do you prefer. Trading is my job. Investing is what everyone does and everyone should do. And investing is not just limited to investing in demat instruments, but also outside. Because the way I see it, my trading also doesn't have unlimited scalability. See, the thing is, the shorter the time frame you trade, the less scalable it is. So I try to put it both in and out of the market. And my strong belief is that beyond a certain point, and different people's comfort level is different, you should not try and get into this mindset of I will trade and then I will that'll add to my capital, then I'll trade more, then I'll compound, and it'll become infinite compounding. That's a very bad method, in my opinion, to approach trading. Over the past few years, I've ensured that I've taken money out and put it into other things, be it like real estate or be it into other forms of investment which are not related to the market. So yeah, I make an active effort to, because I'll be very honest, I'm not comfortable trading too much beyond, let's say, an account of 10 crores, which is as long as I'm trading primarily intraday. I don't want my account to grow beyond that. So as my account approaches that number, I keep withdrawing. Like I've spoken about this before. Like I built one office and I bought 2 apartments last year. So each year I try to put money into real estate and get it out of my account, provided I've sort of reached a good enough return where I'm like, okay, now I want to again scale back down. I don't know, some people, their psychology can scale immensely, but some people cannot. So you have to understand, who are you, what are you. Like I get very stressed out if I see that, okay, my account is growing, and then I'm just proportionately taking the same risk as my capital gets higher, which means, like, on a 1 crore account, it's very different to take a 2% risk, and on a 10 crore account, it's different to take 2% risk. Some people can do it. Well, great, it works for them. Some people can't do it. Then you should not force yourself, because then you'll make mistakes.
Thanks, Bunny. That's a great takeaway. Thank you so much. Yeah.
My pleasure, bro. Yeah.
Hi, Shreyas.
Hi, Sagar. How are you?
I'm good. How are you?
All well.
Long time. So, are you done for the day? You seem to be free.
Yeah. My day is done. I only have some zero credit ratios, and towards the end, I will have some. Depending on what happens, I might take some long wall trades, but more or less my short wall day is done. Like there's no point. 140 rupees bank nifty premiums. There's no opportunity there. So
Right. So, one more question regarding when do you stop scaling? What are the things to consider? I know it's different for different people. If there is any general things that needs to be considered before stop
See,
compounding.
there's no general thing. There's no general thing, but let me give an example. The way I look at the market right now, as far as my trading is concerned, is I have a few multiples of the capital that I have introduced when I started trading. I've already taken out. So whatever I'm trading now is all on money that I've made. But that doesn't mean I can be lackadaisical about it. But that gives a huge confidence boost that, you know what, I'm not risking, because see, in this market anything is possible. Okay, so F and O, if you're trading, always be of the mind. I mean, at least I'm of the mind that anything is possible. So accordingly, only put on the risk that you're comfortable with. So there's no hard and fast rule of where do you stop scaling. If someone is comfortable, then they should not stop scaling. Like if somebody's mindset is that, you know what, I'm very comfortable with taking the same risk on larger capital and letting it to compound. I'm not saying that's a wrong approach, but you need to be at peace with it. So there's no general answer to where do you stop scaling.
Yeah, thanks, Shreyas, for that.
Anytime, bro.
Hey Shreyas, this is Sunil Thakur. Can you hear me okay?
Hi, Sunil. Yes, I can hear you.
First of all, been a huge fan of your work. I've been following you for a while, you and Kulkarni and a whole bunch of others, and I've learned a lot from you. I'd personally like to think I trade with pretty much similar thoughts and a process as you do. I'd like to think that. I hope I'm that. My question to you is twofold. One, do you think for an individual it's important to understand, the thing, the terminology sometimes you use, like you just recently said you go long gamma, and then you just said short volatility, short vol. I personally don't understand that. I've been trading for 18 months and doing fairly okay, I think. Haven't been in net loss yet, so I think I'm doing okay. So these are the two things. And if I need to learn that, I've tried a lot of stuff. I understand them individually, but I don't understand in the context or the terminology that you use. Where can I learn that? That's one. And two, we see that these days, even 50 points away from spots, on expiries like at 3 rupees, 4 rupees, not worth trading, right? And it's all because of all the expiries on every day that has started. So do you think at some point this would normalize and hopefully go back to older days? Let's say the days that were 8 months ago, 12 months ago, like, even 150 points away, strikes would be at reasonably 7 to 10 points, right? 7 to 10 rupees. Do you think that would happen, or those are just the gone days? Not that I'm complaining, I'm adjusting, but I'm just wondering because I don't understand market, I think, as much as you do. So these are the two questions. Thank you.
Hi, Sunil. So thanks for your questions. See, as far as terminology goes, it's just an easier way of communicating. The idea is that anyone who's in this space for long enough, I mean, you're not going to explain a premise to a large extent. So when you say you're long gamma, it's kind of understood that you're talking about being long options which have like a high gamma exposure. So like any rapid move is going to help you, like any form of momentum is going to make it profitable, and any stagnation is not going to make money for you, right? So that's one thing. And when you say, I'm talking about like being short wall or being long wall, once again it's about what is your vega exposure, right? So if you want to learn these terminologies, there are so there is one Zerodha Varsity, which obviously exists and is one of the best material available to pick up on a lot of being what is being said. Not many people have the patience, but like I have like about 200 hours of content that I've put up on YouTube where I just go over my trade every day. So if you like go through that, you will definitely get a lot of references because it would be like repeated a lot of times. Apart from that, as far as like books go, I really don't know too much. I haven't read too many books on options itself. Most of what I've gone through is more psychology related, so I won't particularly be able to help you that. Now, in terms of will we go back to older days? Will wall regime change? Look, all wall regimes are cyclical. You will have certain type of behavior at one period, and that will change probably every 3 months. What my take on wall regimes is that most regimes last about 3 months. When will it change? Will it change? Will it not change? These are really difficult to comment on. Now, a straightforward answer that anyone would give you is that, oh, when elections are coming up, that time we should see a slight increase in wall. But that, since the whole market is expecting it, that might or might not be the case. So there's no straightforward answer to will the old days come back. So we can't keep waiting for that also.
All right, Shreya, thanks for the answer. And I am the one with patience, and I've spent a lot of time reading books and learning, so I certainly would spend some more time learning these terms. I don't think it's, that important, but I sometimes find it, how is it that I've been doing this for 18 months and I don't know some of these things? And though I'm profitable, it's sometimes...
You don't particularly have to know the terms. You probably know the premise and the concept.
Yeah.
Right, so like it's less to know the terms. The reason the terms help is because when, let's say, we're communicating right now, rather than explaining the entire premise, if you can just state a term, then to most people who have context, they will be able to relate. If you get what I'm saying, it's just for ease of communication.
Okay.
Yeah.
All right. Okay. All right. Thanks, Reyes, and good luck.
Yeah. Thank you, Sunil. We can take the next.
Imish, you can go ahead.
Hi, good morning. Good morning. Yes, I had two questions. One is regarding. Would you? So, I'll go for the first question first. So, would you recommend? So, let's say I withdraw part of my capital, basically like part of my profits from my trading account, and then use that to buy a property with half cash and half finance. Second thing is. When you buy a property, your money kind of gets stuck in case you're not able to find a buyer quickly. So, are there any other ways you've diversified that, diversified your income, which you would recommend? Just these two.
Hi, Limesh. One thing, right? So, in terms of withdrawing it and putting it into property, that's half the point. That it's not liquid and you're not looking to liquidate it. But at the same time, you need to have liquid reserves. So, like for example, I have FDs which are outside the market. Why can't I just buy bonds and pledge that and trade that more? Because I don't want it in my trading account. So that is liquid money that I have outside. Now I pay. I'm a part of an organization, right? So I pay PF for myself and I pay PF for all my family members, and that way this is money that's locked away which I cannot access. That's half the point. Look, I said this many times, but it's not about maximizing returns. It's about not having too many eggs in one basket and about creating many nest eggs that never want to use, but you have access to. Like, for example, my daughter, she's like 14 months old. There are investments in her name. Like she has her own demat account and she has index funds and she has bond holdings. Why can't I do that in my corporate account and pledge that and trade? Because I'm not looking at maximizing returns. I want to have enough baskets, nest eggs outside which I don't touch. And in terms of real estate also, whether you should finance or not, really depends on individuals. For example, I don't do financing. I have zero debt. But at the same time, I will not purchase large ticket size properties either. So, in fact, larger ticket size properties are probably slightly easier to liquidate than smaller ticket size properties. But the thing is, the yield on smaller ticket size properties will be high, and I'm anyway not looking to sell. The way I see it, right? Investing, be it into real estate or be it into stocks, is not for the idea of I will quickly get rid of this investment and put it somewhere else. It's a very non-trading approach. It's about I'm going to create something for myself, for my family, which is going to exist. Okay. Now that is separate. Now I forget about it. So that was the thing. What was your first question? I'm sorry, I couldn't hear part of your first question.
So you actually answered the first question. The second question was: are there any other methods of diversifying your money apart from real estate? Because although I got a question, there should be you want to put some money away from the market, but are there any easier ways of
Yeah,
diversifying your money
of
outside
course.
the market?
Of
I mean,
course. So, like most
practically,
people hate, FDs, but FDs are not a bad tool, especially at current this thing. Then you have obviously you can buy gold, you can buy silver, things of that nature. I'm not into crypto, so I would not recommend crypto. And if the ticket size for real estate is too large, many people recommend REITs. I don't recommend REITs because all the REITs are at the end of the day managed by that particular builder, and builders in India are just not trustworthy. I don't have faith in any of the builder because at the end of the day, what comes down back to us through that REIT will be less. Because in India, I don't know if you know, but a lot of building activity happens in black. There's a lot of transactions, this that. So finally, I would much rather own my own piece of office space than be a part of a REIT where it's managing like lakhs and lakhs of square feet of office space. So apart from that, as I said, like there are, for example, if you are an employee, you can take voluntary PF, that as well. So it will not. These are not for high returns. These are for you have money stashed everywhere. Put money everywhere so that you never feel like in a rainy day that, oh, I have too much concentration in something. And of course, you have stuff like gold, which Indians have been doing for forever, but it doesn't go much beyond that. It's either like precious metals. I'm not a crypto guy, so I just will not comment about crypto in this real estate or debt.
Okay, got it. Thank you so much.
Yeah.
Hi, Shreyas. I just had a couple of questions. So, first is, I mean, I don't know if you talked about it earlier, but you were trying out some positional system, right? So, can you talk a bit about that? I mean, are you doing that? Because I'm sure you would have done that when you started your trading, right? And there was a reason that you moved away from it, and then you only started doing intraday. So, are you doing that? And if somebody like me, I mean, I don't trade expiries because I have a full time job. But then somebody like me who has to do positional, I mean, what kind of advice do you have? First of all, which index? I mean, Bank Nifty is obvious, which comes to mind. But then, any advice that you have for someone like me who wants to do positional?
So, like at the onset, I used to do positional trading, fully like naked positional trading exposure, that kind of a situation. But I did diversify into like everything from stocks to index and all of that. So it was primarily like monthly trades. The reason I got away from it is because like COVID was kind of a massive realization that, dude, I got lucky and I survived. Luck will not take me forever, because a lot of people who traded pre-COVID, you don't hear much of their story, because whenever something bad happens, right? Like most people, they never talk about it. So many don't know the kind of devastation that had on people. So after that, I was like, yes, like hell to this. I'm like just going to be trading intraday. That's how I got into intraday, primarily because of the fear of what naked positional trading could do, and somehow hedged positional trading was just not as attractive at that point. So I'm like, okay, if I can't do either, I will trade only intraday. The reason I then started pivoting again away from intraday is just due to the operational risks that started propping up, be it like with freak trades, or be it with broker going down. Once your exposure is large enough, you will start like feeling really, really scared. It's not about losing some money to like an issue that happened. It's about, oh, what is the worst case scenario? So because of that, recently I've once again started experimenting with cross trades, which is primarily like, think of it as calendars between Fin Nifty and Bank Nifty, for example, when you have two back-to-back expiries. So that is one kind of calendar. Then you have Nifty Sensex, which is another kind of calendar. I have generally I have some long wall stuff that I do on mid cap. So stuff like that is what I'm experimenting with. To be quite honest, so far I've not really found anything that is like, wow, there's a big edge over here. But it's still in the process of experimenting, because, as I said, I want to reduce exposure to high churn, high leverage expiry trading. I trade expiry something like a one lot for 3 lakhs or one lot for 4 lakhs, stuff like that, so that I'm not at the edge of my seat. And I don't mind losing money to the market. Like, I've never had a problem losing money to the market. I'm more afraid of like, for example, today I post that validation pending order. Nothing happened. I didn't lose any money on that. It went off after 30 seconds. But my whole thing is, what if something really... See, let me tell you something else. Cracks in systems don't show until something drastic happens. What do I mean? Let's say it's the exchange, or let's say it's the broker. You'll find most of the time technical glitches happen at the worst time. And that's very simple, because that's when the load goes up. And with so many people trading, with so many people being stuck on like 2-3 strikes, whenever the load goes up, it's just too scary for me. So my idea is, I will trade less quantity in this daily expiry thing, and I will push my trades across. Now, in terms of, okay, if you're building a positional book, how do you do it? Ideally, you can, even if your book's exposure can be high, provided it's diversified into enough things. Like, let me give you an example. You can have some long wall trades at 2024 December end. Like, you can create a ratio back spread in like the indices, for example. If you're having short wall trades on shorter time frames, let's say you're trading iron condors and stuff like that, and I'm also, my positional trading is fully hedged. I don't do naked trading, because that'll just not let me sleep. So it's like, okay, let's say you have some weekly trades. It could be in multiple indexes. You have some monthly trades. You could have SSO. You're trading in like some amount of stock options. You can have setups. And ideally, you want to not only be diversified across instruments, you also want to be diversified across wall exposure. It's not like you should be short wall on everything. The idea there is that, not that you're trying to maximize your return or whatever. It's that you want to have a more smooth equity curve, and that's only possible if you are not only diversified in instruments but also diversified in your volatility exposure. And ideally, depending on situation, like in current situation, I would prefer to have like long wall in a larger time frame and short wall in shorter time frames. So there's no hard and fast rule, dude. If it was that easy, everybody would be doing it, right? Like, yeah, the main thing is reduce exposure to daily expiry and build a book which is like a balanced book. And yeah, but this is, once again, as I said, this is my current take and my current approach. I don't necessarily think it will be the best for anyone else. Like there might be people who are making much better returns and much whatever, but it's also important what are your goals. My goals are, I don't want to take stress, because I see myself 20 years later also doing the same thing. So I can't be burnt out by then. Even if something's making more money, I would focus on what is giving me less stress. And yeah, if I'm like glued to my screen trading at like 5x, 6x notional exposure, expiry, milking everything till the end and all that, then I don't see myself being able to do this for more than 2-3 years if I continue to, like, for example, let's say how I was trading in 19 and 20. If I continue trading like that now with everyday expiry, I'll burn out in 2-3 years max.
Yeah, thanks a lot, Shreyas. Helps.
My pleasure.
हाय श्रेयस, आपको हिंदी आती है ना?
हाँ,
I can understand
Can you
English,
mention your
but
name? I'm not able to see.
my name is Shiv, sir. My name is Shiv.
Sure, sir, please.
मैं हिंदी में क्वेश्चन पूछूंगा because I am comfortable in that. You can answer in English.
It's fine, sir. आप पूछिए. Yeah.
हाँ सर, पहला तो ये है कि मैंने जैसे पढ़ा है थीटा के बारे में, तो मेरा अंडरस्टैंडिंग ये है कि थीटा जो भी वैल्यू रहेगा आपका डे एंड तक उतना आपका जो प्रीमियम है, मतलब प्रीमियम में से उतना थीटा वो कम हो जाएगा, ये मेरा अंडरस्टैंडिंग है। और जब मैं कैलकुलेट या फिर ऑप्शन चेन देखता हूँ तो इंट्राडे में थीटा बढ़ता है, तो उसका लॉजिक मुझे समझ नहीं आता है कि थीटा बढ़ कैसे रहा है। कांस्टेंट रहा तो भी समझ सकता हूँ, लेकिन थीटा बढ़ कैसे सकता है, ये एक क्वेश्चन है। और दूसरा सर, आपका क्या कहना है कि जो स्ट्रेटजीज होते हैं, कोई बंदा अगर इनिशियल स्टेज, बिगिनर स्टेज में है, तो उसको एक ही स्ट्रेटजी लेके उसी का ऊपर फोकस करना चाहिए या फिर मल्टीपल स्ट्रेटजीज का स्टडी करके एक बास्केट बना के रहना चाहिए, जैसा सिचुएशन रहेगा उस हिसाब से वो ट्रेडिंग करना चाहिए।
Thank you, Shiva sir. So पहला एक चीज, so like okay, let me put it this way. अगर if there is a 100 rupee option and उस पे थीटा है दिन का 20 rupees, okay? Now थीटा बढ़ता नहीं है, it is more about the behavior of IV. Let's say market बिल्कुल वही पे रहा है, it's not moved at all, बस कोई भी movement नहीं हुआ है market, plus minus 0. ठीक है, and let us say instead of 20 rupees the option has reduced by 30 rupees, it has become 70. तब हम बोलेंगे कि the volatility has fallen. See, at the end of the day, the way Greeks work is जो भी fit नहीं होता है ना ऑप्शन में, को IV में डाल देते हैं. The idea is उसको थीटा के हिसाब से it should have fallen 20 points. There's no delta, तो उसका कुछ value नहीं है, because market is not moved, but वो गिरा 30 rupees. So which means the volatility has fallen. The IV, that component is consumed by IV. Agar if it falls only 10 rupees, it was supposed to fall 20 rupees, but it's fallen only 10 rupees. Then you'll say IV has gone up. So that's how things are accounted for. Like for example, let's say the market has moved, बैंक निफ्टी हैज मूव 200 रुपीज, ठीक है, और जो एट द मनी का स्ट्रैडल है, हम दोनों टाइम एट द मनी कंसिडर करेंगे, वो इट हैज फॉलन बाय अ लॉट, वी विल से ओके दैट वॉल्स हैव कूल्ड इनटू दिस मूव, जो डाउन मूव हुआ है उसमें वोलेटिलिटी आल्सो हैज कूल्ड, बिकॉज़ whereas if it were to stay the same or rise after a period of time, that would be attributed to an IV change. So it's not about theta badna, it's more about okay, whatever is not encompassed, the theta that has not been realized, that's been accounted for by the IV. Secondly, in terms of should you stick to one system or like diversify into systems, look, if you are new, right, try and build one system first, like build some comfort level on one system. The reason for diversifying systems is to bring smoothness to your equity curve. आपको ऐसा नहीं चाहिए कि you are today up 10%, tomorrow you're down 8%, then you're up 7%, then you're down 5%, then you're like ये किसी को नहीं चाहिए. Most traders, as they start to scale and as they start to mature, their idea is I don't want too much up down up down up down happening, because that is going to create a kind of dissonance and make you, it's going to always put you on a high stress. So the reason you start creating basket of strategies and all that is because you don't want to have high variance. But अगर ऐसा है कि आपके सिस्टम में ऑलरेडी वेरिएंस कम है तो उसको ज्यादा डाइवर्सिफाई करने की जरूरत भी नहीं है.
Okay, sir.
And once again, sir, as I said, it's trading is all about what are you comfortable with. Some people are comfortable. They're like, I don't mind taking a 20% drawdown. I will make 100% in a year. So there's nothing wrong with that as long as he's comfortable with it, right? So whereas somebody will be like, boss, मेरे को साल में 5% से ज़्यादा drawdown नहीं चाहिए. Even if I make 25%, I'm happy with it. Oh, good for him.
ओके सर, एक डाउट है. जैसे आपने कहा कि जैसे ही प्रीमियम मतलब थीटा का जो भी चेंजेस है वो हम आईवी में डाल देते हैं, समझो अगर वो नहीं गिरा तो आईवी का इफेक्ट वीगा पर भी होता है. तो वीगा मतलब वीगा तो डायरेक्टली प्रोपोर्शनल होता है शायद आईवी से, तो जो भी इफेक्ट आना चाहिए वो वीगा में आ ही रहा है, तो स्टिल थीटा का अलग से इफेक्ट क्यों आ रहा है?
See, okay, let me put it this way. At the end of the day, prices of any option is all defined by demand and supply. आप उसको you want to break it down into component of theta and you want to break it down into component of IV. That's just a simpler way of looking at it. ये ऐसा है कि at the end of the day, if you are expecting a certain behavior, provided nothing else changes, provided none of the other Greeks have had any effect on it, if premiums don't decay by how much you have expected, like for example, आप अगर किसी भी simulator पे देखोगे, you will see that between 1 day to expiry and 0 day to expiry, when the market opens, IVs of all those strikes go up. Expiry mein volatility constantly rises till the end. If you notice, if you go by theta, technically those options should decay much more from 1 DT close to 0 DT open, but they don't because of the IV going up. So the concept is very simple. अगर वो decay नहीं होता है, that is at by how much you're expecting it to, that is attributed to IV, and that becomes a component of Vega, not a component of theta.
Okay, sir. Okay. Thank you, sir. Thank you very much.
Can I speak?
Yes, please.
Good morning, sir. Actually, sir, I am also a non-directional trader, like option selling. So my question is regarding sir psychology. So actually, sir, when I started like in September, like my September was very good. Like I made like 3.5% on my total capital, which is 25 lakhs. But sir, what happened, sir? In like I made like 70 to 75,000 rupees in entire month, and I had like 90% accuracy. Like I have only like 3 red days in the whole month, and it was also small. But what happened, sir, day before yesterday on like mid cap expiry, I don't know, sir, what happened to my mind, but I went into a self sabotaged mode, sir. Like I traded aggressively 4,000 quantity. Like I was in a state of euphoria, and I traded like 4,000 quantity in mid cap Nifty, and that option spiked from 15 to 25 in 15 to 35 in so in like 2 to 3 minutes, and I lost like whole month's gain. And sir, so what should I do, sir, to like manage my euphoria and self sabotaging beliefs? I'm not understanding, sir. It's very difficult for me, sir. Can you please?
Sure. So, okay, see, it's not about you, but in general, right? If you trade a high probability system, you are used to consistently making money. Okay, let us say you're trading a 80% probability system, you'll make money 4 times out of 5, right? Now, in the times when you lose money, it is imperative that you start That's exactly the point of risk management, that you cannot do what you're doing. And in this market, market is not for everyone. Okay, market, if you, there's no tum ye kar lo isse ye ho jayega, psychology will get managed. If you're not someone who can cut your losses, then you will not survive in the market. Today you're doing with 25 lakhs, but you think about it, if you do it like you take this up very seriously, and tomorrow you have 2.5 crore or 5 crore or 10 crore, like what, I mean, whatever. If you behave like that, what is going to happen? See, whenever you have smaller capital, the idea with smaller capital is you have to build the right habits, and how you build it is up to you, because but you have to accept one thing. One way is to accept one thing, that if I don't, then I'm anyway screwed, I'm wasting my time, I'm doing time pass. And you have, see, I believe in a concept of carrot and stick. I do self punishment. Like whenever I do something bad, even if it makes money, I make myself feel like shit. I tell myself, bro, you're a gambler. Like, is this how you're supposed to behave? Is this responsible of you? Okay, tomorrow you'll do this with like 10x this thing, then what will happen? So you have to learn how to manipulate yourself. Like, it might be sounding weird to some people, but your mind, no, sometimes it has to be trained like a dog. It's like you do something good, you, even if you lose money, you have to tell yourself that yes, I cut where I did. After that option became zero, or whatever. You need to tell yourself, no, I did the correct thing. Okay, so RMS becomes, especially for people who are too used to trading high probability setups where most of the time they make money. When they're losing, they're somehow unwilling to give up. They're like, somehow I'll get it back. And that's generally why people go bust also, because what they'll do, like abhi 15 से 25 गया, मैं double बेच दूंगा, ठीक है? So I was trading one lot for 1.5 lakh. Now I'm trading one lot for 75,000. मैं double कर दूंगा, थोड़ा भी आ जाएगा. And that's exactly how people, sometimes you'll see there are people, they'll be like, okay, I consistently make money, I never lose money, and one day they've lost one month worth. That is not, you can't survive like that. Like if one single day of yours can take away like, let's say, a month's effort, then something is horribly wrong. You have to introspect, right? And there are no shortcuts here. If you can't force it, see, the market is a very cutthroat place. There's no good ending for anyone. Very few people will do well, and in that, if you're indisciplined, then it's guarantee you will not do well. Even if see, here's the thing, right? It doesn't matter if someday it'll rain. That time everyone's going to get wet. And one more thing, right? People, I also make this excuse. By the way, don't take this against you. I'm talking about myself also. When I talk about a lot of this, I'm also talking about myself. People will make excuses that, oh, today I made a mistake and market punished me and all, they'll say, right? Actually, mistake has been happening every day. Okay, mistakes some people make all the time. Most of the time, market will let you get away with it, but one day it will not let you get away with it. So when people say, this day I made a mistake, we have to introspect and say, have I made the same mistake many times? And then taken it for granted that it will always forgive me. So that also is something to look at. Being very honest with yourself is important. And also one more thing, like though many people will take it bad way, this is not an industry for everyone. Especially this high intensity daily expiry trading is not for everyone. If you see that it's not working for you either monetarily or psychologically, you should really reconsider if it's worth exploring. But yeah, there's no shortcut, bro. And don't take this as though I'm telling you and giving you some lecture. In a lot of what I say, I'm always talking about myself also being part of the same kitty.
और सर मतलब हिंदी में बोल देता हूँ सर, मैं मतलब बहुत बुरा फील होता है सर, बहुत कभी कभी डायरेक्शनल और नॉन डायरेक्शनल दोनों प्ले करता हूँ, तो मतलब दिन भर बैठ के मतलब 9 से 3 तक मेहनत करो पूरा महीना, और अचानक एक दिन ऐसे चला जाता है ना सर, तो मतलब बहुत अंदर से टूट जाता है सर.
तो नहीं जाना चाहिए भाई. So you have to take it. See, everyone makes mistakes, and we have to learn from those mistakes. It is not about it's about what you do. Agli baar ki you don't allow such situations to happen. It's not possible that in a month you make 3.5%, in one day you take 3.5%. There have to be some hard rules that you follow. Like for example, a rule that you can make for yourself is, if I lose 1.5% in a day, no matter what, let hell break loose. Best opportunities will only. By the way, अपॉर्चुनिटीज बेस्ट तभी दिखेंगे जब हमें ऑलरेडी बड़ा नुकसान हो रहा हो, ठीक है? सो इंश्योर दैट यू आर लाइक, नो मैटर व्हाट, You see, for trader, confidence is very important. If you lose confidence and if you lose self-respect, you can't be a trader. So do things like say that, okay, if I go beyond this much loss in a day, then I will have no respect for myself. I have to cut. You have to figure out a way to do it. And if you can't figure it out, then nothing good will come of it. But yeah, you have to do it or you will not survive. But yeah, there's not too much rocket science in this.
So, can I
Yes, sir.
speak
Thank
now?
Yes, please.
Hi, Shreyas. So, I've been following your content from few years, and it has been quite interesting and insightful. So, I have one question with respect to stop loss management, and it is more of a step forward on the previous question itself. So, I've seen in the videos that you put stop loss on the put options, and you usually don't put it on call options. And for put options as well, I think you follow 2x of the premium or 2.5x on the expiry days. Now, given the current regime, so this question is very specific to the current daily expiry regime. Over here, how do you? So my question is twofold. One is, what is the number that you are tracking? It is 2x, 2.5x, 3x for each of the like call and put. And secondly, does it vary depending upon the premium? So for instance, if I talk about Bank Nifty today, let's say a 20 rupees premium, do you go at 3x, and maybe a 40 or 50 rupees premium, do you go at 2x? Do you follow this, or do you don't put stop loss at all and risk manage it by moving different legs as per the trend? So if you can answer that, that would be quite helpful.
Sure. So in terms of stop loss management, currently, I mean, my videos, how I used to do it to now, there's a lot of difference. So, I mean, a lot of you would have seen how trade flow works. Currently, what happens is it depends. So there's no set stop loss or whatever. But because of the entire spike regime, now it's been almost 2 years since I placed a market order. I don't place market orders. I place limit orders, which are market protection orders. So what ends up happening is once a trigger is hit, I will place a limit order which can be 2%, 3%, 5% above whatever is the LTP. If that order doesn't go through, then I will pull that order back and issue a new order. So that's as of now what I'm doing is I have trades which are at the money, I have trades which are out of the money, and it depends. There is no hard and fast rule of how much. Sometimes I might enter a high value option with just like a 20% stop, or I might enter a low value option with like a 50-60% stop. So it depends. I don't have a single answer to how I'm doing that. In terms of how I'm using stop losses to manage the spikes, there is a particular mechanism wherein if a stop has to hit for me, the price has to tick above. Let's say my stop loss is at 50. Then the LTP has to tick above 5 for 5 consecutive ticks. Then that will trigger an order which will be higher. It will be a limit order which will be much higher than 50 to take me out. But if it ticks, let's say 50 and then ticks 45 and then ticks 50 above 4 times, it won't go. So that way what happens is a lot of these spikes are very momentary and they are for like very few ticks. So I'm avoiding those random things happening by taking this method. Of course, there's a downside to it also, that if there's a massive gamma move and it goes from 50 to 60 to 70 to 90, then I will incur potentially a larger cost in exiting that. But it depends on which poison you want. Do you want a potential order jump which might give you a higher cost exit, or do you want to avoid yourself from getting taken out in free ticks?
Yeah. So what I understood is you are putting the stop loss on 60%. For instance, let's say if it is out of the market, and post that you are taking 5 consecutive tips. So post that the maximum loss could be 2x of the premium that is going around. So somewhere down the line, it is on average 2x or 2.5x if there's a strong gamma move.
It balances out. The number of free ticks you avoid versus the number of order jumps you get, it will balance out. So it's about which poison do you want. You want this poison or you want that poison. You can't have risk free. You can't have limit order without potential for SL jump, and you can't have market order without potential for freak price. So for me, freak price is a bigger headache than little extra delay in executing an exit. So, but yeah, and generally speaking, right now the biggest fear that I have is these freak prices. So I don't punch, like in the past 2 years I've never punched a market order. I don't use market orders at all.
Understood.
Be it console coder or be it trade flow, all of them have options to trade only in limit orders, so that shouldn't be a problem with things. So it's about which one is worse. Yeah.
Got it. And it's always great to hear you. Thanks a lot for being so helpful.
Thank you, bro. My pleasure. We can go to the next.
Hello, Shreyas. I hope you're doing well. I wanted to know how you're managing mid-cap Nifty and your opinions on Sensex and the way you're managing your position sizing, which is differently than what it will be on Nifty, Bank Nifty, and Nifty.
Okay. Thank you, Siddesh. So, see, mid-cap Nifty, I said earlier, it's an instrument where one day it might stay in 30-point range and one day it might move by like 200 points. So my current approach is I will trade literally sell. If I'm selling one strike, I'm buying the next strike hedge. If I'm trading short wall on mid-cap Nifty, and generally my exposure to that instrument will never be more than 10%. Like that's the max. So if I'm primarily trading very tight iron flies or very tight iron condors, if the premium is attractive. Okay, like for example, right now, if I get like a premium of around 70 on mid-cap, I wouldn't mind taking short wall trades on mid cap in this current environment. If once it starts falling off to around 30 rupees on the at the money, right, that's where I start trying to find very cheap spreads, like 25 point spread. If I can get for something like 1 rupee or 1.5 rupee, depending on what the skew is, I trade long options there. So I might actually create a bull call spread, or I might create be it at the money or one strike out the money, or like a bear put spread, where I prefer buying options in mid CP. So it varies, but my main thing is that I will never take large short wall exposure on mid cap. That is a little bit recipe for disaster, because see, what happens is, be it Sensex or be it mid cap, the liquidity looks very good whenever there is not much movement. It's like, okay, there's such a large book over here of liquidity, but whenever, like we saw this recent mid cap expiry, this thing day before yesterday, that once there's a move, you see that there's almost like 7 to 8 rupees bid ask variance on like a 40-50 rupee option. This is like 20% of the option itself, which is why I don't like that thing. So I keep my exposure there low. We'll see, maybe in another few months can increase. Same with Sensex. Sensex, the thing is, I don't, what is it? BSE is new, okay? So BSE has not proven itself the same way NSE has. So that's why, once again, I don't like to take large exposure there. I limit it. If I'm short, I will be trading primarily iron flies or iron condors with very tight hedging. See, in this low wall environment, it's better to have tight hedging. It's like, trade a one strike hedge or two strike hedge. That gives you a much better situation than trading naked. So yeah, both of them I'm keeping low exposure. And also, I'm thinking of how do I divide my stress quota. Okay, so each day that I sit at the desk, I get stressed. So the way I look at mid cap and Sensex, those are my relaxed days. If I'm going to be trading at some intensity on Fin Nifty, Bank Nifty, and Nifty, then I need some days to relax. So those are my relaxed days, right? So that's how I look at it. Even if there's good opportunity, even if stuff picks up, you have to decide, where am I going to dedicate a lot of my mental energy, and where am I not going to dedicate too much of my mental energy. And so it depends on you, what you like, what you don't like.
Okay, thank you.
Hi, can I speak, sir?
Yeah, please, bro. Please go on.
So I have two questions. You recently talked about FDs are being good. So will you prefer GSECs over FD because GSECs are comes under sovereign guarantee? And my other question is about covered calls. You mentioned in a tweet that covered calls are not worthwhile, and I noticed on your YouTube channel you used to employ a significant number of covered calls. So are you still using those, or will you prefer to utilize the same margin in other high probability FNO trades?
So, okay, two things, right? Why FDs versus GSEC. Now, let me tell you what is the main reason to go to GSEC. One is sovereign guarantee, yes. But the other reason to go with GSEC, especially the longer dated ones, is that it's a bet on the interest rate. Ki agar interest rate girega, तो फिर instead of making 7.5% or whatever, you might even make up to 8.59% also. But अगर interest rate बढ़ता है, and people look, my view also is that current interest rates are at a fair point. Inflation also, generally speaking, is under control. So it should not rise further. But ये सबको लगता है, and nothing is impossible in the market. So if you have too much money invested in GSEC, अगर interest rate बहुत ज़्यादा बढ़ जाता है, and you are exposed to let's say 30-year GSEC and 40-year GSEC, then आपको बड़ा mark to market loss आएगा. The reason FDs have an advantage is you don't have interest rate change risk. जब interest rate बढ़ता है, you've locked in an FD, you've locked in an FD. आपको कोई फर्क नहीं पड़ेगा. So that's why, be it GSEC or FD, my approach is, if I'm using GSEC, it is because I am also betting on the fact that the interest rate will not go up too much further. Let's say if it goes up, then I can always liquidate my FDs and then buy more GSEC at a higher yield. Let's say आपके GSEC का पूरा portfolio मिला के current yield is 7%. Okay, let's say the rough yield that you're working with on your GSEC portfolio. Tomorrow, if rates rise by 3%, you're going to be sitting on a mark-to-market loss on all of them, right? Because the yield would have proportionately gone up, so the bond value would have come down. उस पे mark-to-market loss नहीं आएगा आपको. And you can always then see about, does it make sense to liquidate a part of your FDs? Many people do this, by the way. Whenever interest rate rise, they square off their GSECs which are shorter dated, जिन पे effect ज़्यादा नहीं हुआ होगा, and then they buy longer dated GSECs because if their idea is that eventually rates will come down, it will benefit them more. So it all depends on that. It's like, okay, why not only GSEC? It's not about should I do only GSEC, should I do only FD, should I do only, no, it's not that. Spread it across everywhere. And once again, the way I look at debt holding is, it is nothing but a way to park your money. कि जब risk assets are more attractive, that time you have the liquidity to get it in. So if I require less liquidity, I will, and I don't plan on squaring off anytime soon, I'll go to GSEC, which when I say I don't require anytime soon, I'm talking about 2-3 years horizon. If I'm like, okay, I might need this cash for something in the next 2 to 3 years for some kind of an investment, then I would prefer FDs.
Okay, and the second one is about covered calls. So would you prefer to
Yeah,
do
covered
covered calls or
calls,
using that same amount?
Correct. So covered calls, the reason I stopped doing it is fundamentally any trade that you take, right? It also takes up certain mental capacity. A covered call might have small exposure, but even on a small exposure, whenever a stock is, let's say, rallying hard, it unnecessarily takes up headspace कि मैं उसके बारे में सोच रहा हूँ कि for some small quantity, I don't want to move, start thinking about all that. And the potential, and also in a low vol regime, in a high vol regime, covered calls, okay, there's some sense in it. Right now, SSO walls are shit. Okay, there's no money there. ये आपको मतलब कुछ नहीं बनेगा. If you're trading, the only way you'll make money if you're trading at the money on that. If you're trading out of the money, तो भूल ही जाओ. आपको कुछ नहीं बनेगा. So in a low vol regime, what is the point of doing covered call? Is my opinion. And also that why to waste headspace on that when it's such a small exposure per stock? Why should I track so many instruments and उसके ऊपर covered call का ये वो whatever? So बस the whole thing was the amount of money it makes is not worth the time that it takes, because as I said, I'm rationing my time. For me, it's all about I need to use my time in such a way that I'm not feeling overworked. So, and it doesn't make too much money also, and the walls are really bad. So क्या करेंगे covered call?
So would you still prefer to use the same margin in other high probability FNO trades?
So it depends. That matlab, one is not related to the other. In terms of, would I rather do covered calls or would I rather, like for example, let's say I feel some stock that I have has run up a huge amount. I might create a separate spread on it, maybe a credit call ratio spread or like straight up a bear call spread, stuff like that. But I don't want to get into, okay, I'm going to sell equal quantity of what shares I have and उस पे consistently system की तरह बनाऊंगा. I don't want to do that. I just think it doesn't make too much money, and when it goes against, it's just a really big thing about, okay, it's going like super against, because अगर आप दूर का बेचोगे आपको कुछ पैसा नहीं बनेगा, आप पास का बेचोगे, then if the delta is continuing to go against you, then it's a pain to manage. Yeah, so I don't think one is related to the other about margin. Would I switch into high probability trades or not?
Okay, thanks so much.
Yeah, thank you. Yeah. I think we'll do like another 10 minutes and then we'll call it. So I think we can probably take 2 or 3 questions. And yeah.
Sir, good morning. You told to cope with the current regime, like cross-index trades. So if you can elaborate about it, it would be nice, sir.
So I'm also still in the process of experimenting with this, and so far, like I'm not able to find anything with like a consider that it's not, but it's not made me money, it's not lost me money. But the idea is very simple. You look for high correlation. So high correlation would be Nifty and Bank Nifty, right? And Nifty expires on Tuesday, Bank Nifty expires on Wednesday. So अगर let's say आपका view bullish है, right? So what do you do at that point? आप put बेचोगे, right? But at the same time, to hedge that put, what you can do is, let's say you have sold 1 lakh premium worth of put on at the money of Nifty. And you buy 1 lakh premium worth of at the money of Bank Nifty premium. Now if the market goes up Tuesday को ये Fin Nifty का zero हो जाएगा, Bank Nifty का zero नहीं होगा. Right now in terms of how do you find a balance, the things I've been working on, okay, what kind of premium between the two makes sense, what kind of deltas, because sometimes your deltas also can get mixed match, because even though the instruments are highly correlated, it doesn't mean they have to move exactly, मतलब tick by tick exact move होंगे. Right, so that is the concept of a cross trade. To enter such a trade, generally speaking, if I was, let's say, taking the same trade of I'm long and I want to create this, I will wait for a divergence in IVs between Fin Nifty and Bank Nifty, where Fin Nifty IVs have risen, but Bank Nifty has not risen to the same corresponding extent. So if I'm tracking the spread, I'm trying to look for a divergence of that where I'm able to sell Fin Nifty at an attractive price, while Bank Nifty I'm not buying at what I would consider an elevated price. So that kind of a setup is one. I'm just giving you an example, right? So similarly, you'll find correlation between Nifty and Sensex. Once again, those two expiries are 1 day apart. Now, if they're 1 day apart, you have the potential to look for such calendar trades, and that's exactly what I have been experimenting with, and so far, like it hasn't really, like, what am I always looking for? I'm looking for, is there anything consistent here where I'm able to like scale this up by a big amount and make good money on this. But as of now, this whole regime is so new that it's not yet gotten to a point where I'm like, oh, I'm very convinced with this approach. So yeah, but that's what I mean by cross trading. That you essentially now in this regime that you have so many expiries and many instruments are correlated with like 1 day expiry and 0 day expiry being next to each other. There are opportunities between them. That's what I mean.
Thank you, sir.
Yeah.
Hi Shreyas, Pranay this side. First of all, I've been following you since 2 years, and more or less we have the same trading strategy, and it's been doing well. I've tried everything. Option selling is what has clicked me, and it's making me good money. Only problem is the trading income that I'm getting. I'm just not able to invest it in my portfolio because of all-time highs and all the geopolitical issues happening around. So I want to understand, how do you invest your monthly trading income do you invest it after the month has ended, or do you find right opportunities and hold on that cash? And the second question is, can you help me simplify GSEC pricing? Because one GSEC I had bought for around 104, like 2027 GSEC, around 104, and since then it has been rolling around 101 rupee. So, and I don't understand how the pricing works. Is it
Okay, start with the GSEC thing. Bro, you would have got interest in your account. So,
yes, yes.
हाँ तो आप ऐसा मत बोलो कि it's the same thing. See, GSEC works like this. Let's say the bond is at 100 rupees, okay, at launch, and it has an indicative, let's say it's a yield of 7%. Now, GSEC pays interest once in 6 months. So, as you approach the 6 month period, the price of the GSEC will inch up, and it will go to 103.5. Once the interest is paid to your account, it will again become 100 rupees. Okay, so that's how GSEC pricing works. Now, what happens is a yield dynamic exists if interest rates fall. If interest rates fall, then the price of the GSEC itself will go up because it will still be paying you 7%, whereas everyone else who purchases it at that price might be getting 6.5% or 6%. So that's why GSEC price does not go up too much, because whatever interest is accumulated, it will come off into your bank account.
So the MTM that I'm seeing is has translated into interest.
Yes, exactly.
Okay.
So that is one thing. Now, in terms of where do you invest? So in the past couple of months, so above the 200 DMA, I don't buy much equity. In the past few months, I have only been buying bonds. So what I do is I buy bonds, everything from 3 year, 5 year, 7 year, 10 year, 15 year. And the idea is that I feel interest rates are attractive right now. And the room for error, see, Nifty had run up quite a bit, but even small cap, mid cap indices, everything had run up a bit. So my idea is that I'm more of a value investor. I don't, I'm not a momentum investor. I look for opportunities, and generally my way of looking at it is 200 DMA and below is an opportunity where I invest in tranches, and at that point sometimes I might even liquidate some amount of debt to push into equities. So currently I'm not buying equities. I'm just investing whatever I've made in the past 3-4 months has gone directly into bonds.
Okay, so you hold on the cash, or do you just remove?
No, I
it
don't
out?
hold on the cash. My in my demat portfolio, my equity to cash, it varies from around 60-40 to like 75-25. It can be anywhere in between. My way of looking at it is I already have good amount of equity exposure, so I don't want to be overexposed. And right now, I think it's not exactly a very attractive buy. So I always wait. And even when it goes down, I buy in tranches. I don't be like, okay, now I'm going to huge amount I'm going to. I will not shuffle more than 2% of my account in a day between debt and equity.
Okay, can you tell me your cash component breakup in different instruments?
So I have about like 10% in cash right now, around 65% in equity, and the remaining in bonds, 25%.
No SGBs?
SGB, I'm considering part of the bonds. So the SGBs is around maybe 3.5-4%, something like that.
Yeah. So a bond breakup only I wanted.
Bond breakup is almost purely GSEC, which is average maturity would be around 10 years. So that, I mean, I have under 10 years and I have above 10 years, but the average maturity will be around 10 years. And some amount of those bonds, I think about 15-20% are in SGB. And SGB I purchased a long time back. Since then I haven't added because I have physical gold exposure. So I don't need too much more. Whatever people say, yeah, SGB is the best form of holding gold, but can't explain that to family also. So.
Okay. So do you think it is a good time to like whatever cash I have in my account, put it in GSECs and pledge it for trading?
I am not giving advice, but that's what I'm doing. So as of now, whatever excess cash I have, I'm putting into GSEC.
Okay. Thank you.
We'll take one last question and we can call it. Okay, so if we don't have any more questions, we can just call it. If anyone has, they can speak up.
No questions, bro. Thank you for the session.
Perfect. Thank you. Thank you all so much for joining in, and have a great trading day. And yeah, really appreciate you guys participating, and wish you all the very best. And we'll catch up some other time. Take care. Bye.
Bye, sir.